Hi, in this video I will cover to see with the data if the stock market is in the near future going to be crash or it's going to stay the same. So let's get started. So on my screen you are seeing the S&P 500 PE ratio. So as you can see from the 2016 to now, the PE ratio was around, this is on the PE ratio like 24, right? You see 24 point in August 16, 24.37, and then in the March, before March it was 27.73, and then it crashed to 22.23, and we know this is the time in the March when the correction was made. As you can see here, right, February, March, the stock market February was down, but in the March it was a heavy sellout was happened. So now we are at very high level, right, as which we can sometime in the numbers we cannot see, but on the PE level is huge. It's 37.5, and usually that's if right now I'm on the historical 5-year chart, but if I see, let's say, on the higher level, let's say the 20-year chart, that was happen in last time, it was in September 2018, right, or when the market crashed into, you see, from 122 to it crashed to 17, right? So that was the worst recession we have seen in the market. But let's come back to that. And even now, if you see from the historical perspective, and the market is pretty high. So PE ratio is quite high, as you can see, 37.5. So it can happen two things. Either so how come the PE ratio can be down? So PE ratio, as you know, is composed of the price and the earning, right? The main problem here is because the people are not spending because of the recession. You know, many businesses like airline, restaurants, and in general as well, people are holding cash, so they don't spend. So if the price, if the earning, so right now the earning is down, so that's why the PE ratio is up, because PE ratio is composed of the price over earning, right? And I have fully explained that in my in my video in my channel earlier, if you want how to compute the PE ratio or index and basket. So feel free to check it out if you're not sure. So pretty much, if the on the PE ratio, if either the earning goes up, that will happen if the business open up. Now the good thing is the vaccine is out, stimulus package is going on, right? So pretty positivity in the market. So there may be then the PE can be adjusted, right, normally, because if earning goes up, the prices won't adjust. The stock market don't need to fall its price, because these are the prices, right? These are the prices. So prices doesn't need to fall, the index. But if the market doesn't open, right, or the businesses doesn't able to open and then further close, then we might see the possibility of coming down, which we can also see like a fear coming, not in the another indicator, which I would also like to share. Right now, basically on this channel, we focus more on the fundamental and value investment perspective, but it's also good to see from the different the matrix to see what's going on in the market. So another one is the put call ratio. The put call ratio is basically, if you go there, just want to give you, because usually in my channel I don't cover any options. Options are mostly for traders, but this is, and we are not, this is based on so they have closed, the traders are more who are very close to the market, and how these volumes reflect. So basically, put call ratio is a measure that is widely used by investor to gauge the overall market mood. So this is one of these study as well. So the key takeaway is basically, what is this? So if the put options, so basically it's put over the call, right? If the put option gets the trader right to sell at the asset price, and call is basically is explain what is put and what is call. But the main thing is to see here is, if the trader is buying more calls, it's a signal to rise in the more puts, right, than call, then is a bearish sentiment. So if we have this ratio like one over the another, if the put is more, right, then is a bearish. But if the call is more than the put, then is a bullish signal. That means the market is going up. So how we see that? So let me show you that. So here, this is the, as you can see, S&P 500. This is the option expiry, right? So these option is going to be expires on the 15th of January. So I'm taking the monthly options, and these are at the money. And so this mean, yeah, so pretty much it's very liquid, right? So basically, if you see here, so these are the total call, and if we see the open interest on the January side is mainly 15,000, 41,000 maximum, and 12,000 maximum. But if you see on the put side, right, the open interest, the total is mentioned here. So the put open interest is $1.2 million, and the call open interest is 624, which come as a ratio of 2.02. So this means pretty much bearish sentiment in January, right? So that's not a good. So if I'll even show you, if I compute by the, let's say, the calculator, right, I bring this calculator and say, okay, let's say, or maybe I'll just bring the Excel, right? It's easy. So Excel, I just want to quickly show you how is. So open interest means these are the open contracts, right, where people are more active on that. So if I bring this one up very quickly, just want to show you. So this is the put open interest, and this is the call open interest, right? So as we can see, we have here 1260, 832, and 624, 932, right? And if I do the put, the ratio, the put call ratio, then this, oops, divide by this. So you can see here it's coming around 2.0175, but if I just round it up, it will be, you see, 2.02. So that's what it's doing here. So that's how it's calculated. So now people might ask, okay, what is the correct level to see? So usually around anything above 1.7 is pretty bearish sentiment, and we already see here is 200 over 200% up from the put. So let's see, is it only for January, or let's see what is on the February side. How is the bearish sentiment is keep increasing, or what is there? So let's see. So if I go here and then switch to the February, you see it's February monthly, which usually the option chain expired monthly around the third week of the month. So that's why it's the 19th. So here we have a same call options, and then we have a put options here. And if I going to show you, wow, this is close to even 2.86. So this means the market is pretty much fearful. What if the package or business won't up? What if the third wave of the corona comes, right? So the traders want to buying the more put options there to cover their positions, right? So because these are like a short-term play, so they reflect in closer to the market, not like from the value investor or the large play perspective. So pretty much, I think, if let's see on the March quickly, so then we'll see the overall picture, right? So if I go to the March, which is 19, then this is 2.05. So now it's come. So this means maybe there is not many right now open, but at least right now we can see the major fear factor is in February. So based on this, if I combine these two studies, that if the first one is on the PE, which is the all-time high, plus the fear going on. So December is almost done, right? So we are near the Christmas, so not much volatility. But if we pass somehow February, I think then we are seems like we are pretty positive, bullish, going to the toward the bullish again. But if something bad might be, it's the February can be the month where the market can do some correction if the earning doesn't goes up by the business, right? If the business like cruise or those industry, you all know, right? Airlines, hotel industry, which is suffering a lot, right? And people are still staying inside. But if the market open up, people are staying up for sure. I think people like to visit. Even I like to visit my friends, my families, fly, take my kids outside. So people, the bottom line is people will start spending. If they start spending, earning goes up and the PE comes down. So pretty much that's from it, my view on the market crash or not crash based on these two studies. So let me know what's your opinion. If you like this video, please give a thumbs up and subscribe if you're new to the channel, and I'll try to cover, I think, the another good qualities next video, some stocks as the value investors perspective. Okay, thanks for watching, and bye for now.